Hello and welcome to the Analytics Show, the podcast of business through the lens of data science. But together, we'll dive into learning and sharing where various industries are heading and how data and analytics is at the heart of shaping business growth and productivity. Let's spark different ways of thinking about data and analytics that is relevant to you and prepare your business for future disruption. I'm your host, Jason Tan. I'm delighted you could make it on this journey with us. Hey guys, to continue to get support tips, techniques, and tools and learn from the expert, hit that subscribe button wherever you are so we can keep in touch and continue our lifelong learning together. So, are you using your company data to its full potential? Take our embedded analytic assessment to find out your score. A leading organization like Facebook, Apple, Amazon, Netflix, and Google have moved beyond dashboard and embedded data science directly into their daily business operation. With our 3-minute test, you will discover your potential in optimizing customer experience and revenue through embedded analytics. You will gain greater clarity, insight, and advice to embed analytics. Plus, you will receive customized results instantly. Find the link to this assessment in the description of this episode. Hello, Yann. Thank you so much for coming to the Analytics Show podcast. Good to have you here.
Thanks a lot, Jason. It's a pleasure. We connected a few months ago. Very glad that we managed to schedule this episode.
Now, before we start into the heavy part of the conversation, I want to talk a little bit about your background. I realized that you grew up in France, one of my favorite countries. I did my study over there. What made you move from France, such a beautiful country, to coming to work in New York?
Yeah, no, I didn't know that you were such a big fan of France. I'm very glad that you're mentioning it. I'm still traveling to France, a couple of times a year to visit my family. For that matter, some of my family is also in Milan and other places in Europe. So very big fan of Europe. It just turned out that my first job was in Wall Street in New York 20 years ago. So it was 2003. So now exactly 2 decades ago. And I fell in love with the energy of New York, the culture, mentalities, the language, people I met here, and one thing led to another. I never left, so here I am. But if you want, I can even give you some more details about my upbringing in France.
Yeah, I would love it. Which part of France did you grow up?
Yeah, absolutely. I don't know if you know, this is the southern part of France, Marseille.
I have been there.
Actually, it's one of the biggest city in France. Very famous for soccer, for football. They're also famous to be a pretty big commercial port. And then they also have like a coastal area that's very beautiful. That would be looking like LA, Los Angeles a little bit, but probably not as beautiful.
I think I remember about the coastal area because I did a trip over there with the cruise. It was so beautiful. Mm-hmm. One thing that I find really interesting is that if I didn't do my research, I wouldn't have known you are not Native American. You seems like you pick up the American accent really, really well. Did anyone ever tell you that?
Okay, you're too nice. I think I have a pretty obvious French accent, but maybe not as strong as the fresh off the boat Frenchie, I guess.
I can relate to that. My accent was so strong when I first came to Australia. Speaking of that, can you still remember the first day arriving in New York to start your dream working at the Wall Street?
Yes, that was actually a pretty fond and I want to say, weird memory at the same time. So I was traveling from Paris to New York to start my first job, as I said, and there was a little bit of a hiccup at departure. I showed up on this Wednesday, which I believe was December 2nd. I don't know, I may be wrong about it. And when I show up to the airport in Paris in order to take my flight to New York, I was missing one of the immigration paperwork, which I left at home. Long story short, I had to reschedule the same flight the next day because it became such a mini crisis I had to deal with last minute. And I'm sure you dealt with, something similar, moving to Australia. The immigration process is always something, pretty painful. So anyway, long story short, Thursday now I'm back to the airport and I finally get my flight to JFK and I land, I want to say something like, late afternoon, early evening. He was probably like 9 p.m. local time. And at that point, there was no Uber, right? 20 years ago. People advised me to avoid black car, which is kind of like those private car service.
Yeah.
They said you got to go to the yellow cab, which is this, landmark, flagship, taxi service in New York. And I managed to get one. And I was pretty like estranged by the experience. My English was a little broken. I didn't know where to go. I just had this piece of paper with the address of my first apartment that I was renting literally for 1 week, right? It was not my permanent apartment at that point. It was just like the equivalent Airbnb for short term. The guy would not understand me. He was complaining. He was being very weird. And when I was in the car, it was like 30-40 minutes drive. I was hearing weird sounds in the cab, in the car. There was some sort of animal that he was actually like transporting. I don't know if it was a dog or some growling happening. Wow. And I was completely jet lagged. I did not understand half of what he was saying. There was some weird sound coming from an animal in front of the car, and the passenger seats. And eventually I kind of got off. And that was my mistake. But I failed to give him like the right amount of tip, which is an important aspect, as you know, in New York. Customers to leave like probably $10 of tip when you do JFK Manhattan. And I think I gave him like $1 or $2. But for me, it was just like, I just gave him like regular tip. There was not a percentage of the full amount. Yeah. He was so pissed at me. He was like, you foreigners, all the same, Frenchy. Like, so it was a little insulting. But for me, like when I go like and look at this memory, is funnier than it is insulting. I think it was just like a good first story to tell about my first day in New York.
I can imagine it must be so vivid in your memory. You really threw me back on the couple of the first day that I arrived in Brisbane. Now, you moved into New York for your first job, working in the Wall Street in Big Apple. What inspired you to leave this job at Wall Street to start your own company?
All right. So now you fast forwarding 17, 18 years. But I can get started by why I landed in Wall Street to start with. So, as I said, I was traveling from Paris to New York in 2003. And I was essentially a few months after my graduation. And I was studying at that point. I was enrolled into a program, a master's of science in computer engineering in Paris, one of the top schools. So my career was meant to be flourishing in technology, computer science, information, IT, network, and other, fancy hardware, software. Little did I know that, I would eventually redirect myself to finance. But at that point, we got to contextualize, right? Finance was the new thing in town. I mean, finance has been around for, a few centuries, but early 2000 was just like the one thing you wanted to do, right? If
Correct.
you wanted to get rich, Psycho, the movie,
Yeah.
uh, wanted to like identify to one of those, high rollers or something. And so in my case, I kind of went for it. I used some of my technology background to get myself a job in essentially the risk infrastructure team within a French bank in Midtown in Manhattan. And but that got me like tremendous exposure to Wall Street and finance world, right? So because while I was more a technologist within the bank, I was exposed to financial markets, trading, bond, equity, derivatives, and for me, it was fascinating. I loved it. It was very quantitative. The economy was involved in terms of any decision making. There was so much money being transferred left and right. It was so new, like out of school, I knew nothing. And then it was like plunged in this like, vibrant ecosystem. And I fell in love with the energy, as I said, right? So people's energy, but also the industry I was focusing was absolutely incredible. Um,
On,
so
on
yeah,
that actually, I think maybe it's worthwhile to go into a little bit more detail because it's actually explained a lot of what you are doing now.
mhm.
So in the days when you were still at the Wall Street, the very function that you were working on is the market risk, which is very much the data analytic, data science, the model to understand, to control all of those risks of all of those trading that you were just talking about, the derivative, the bond. For those who are not familiar about the market risk, try to quickly talk about the market risk, and then we can talk about how that skill set, the very skill set, actually is still so important of what you are doing these days.
Yeah, you nailed it. I'm glad that you actually have this perspective into what I'm doing, because this is the missing link, or that's the how I connect the dots between my past life and now my current company that I'm running. Um, the essentially like the whole world is supported by a global financial system that's extremely fragmented, but also extremely fast at money transfer and liquidity and visibility about what's going on, right? So I can take like the most recent example, Credit Suisse or SVB, right? Silicon Valley Bank. Everybody knew about the major trouble they were entering into, like literally like almost minutes or hours after some early signs of major troubles, like starting to show. And as much as there's a rippling effect in terms of like some contagions, right? You can contaminate fast, but what's absolutely fascinating now is the amount of like um effectiveness and speed of how much financial structure can actually be established to support some crisis that go some companies are going through, right? And that's the recent events actually are demonstrating that the financial market globally is actually much more effective and much faster than it used to be, let's say during the last global financial crisis in 2008 2009, right? Which took years to recover. I think we actually much faster at going through those cycles. So my job, during the first 17 years of my career, right before I started my current company, was at the heart of essentially like the intersect of several skills, technology for automated operations, understanding of financial and economics, but also the full financial modeling and quantitative finance, right? And risk management, essentially like encompassing those three, because risk management only works if you have depth of data, if you know how to manipulate data in terms of trade operation, but also market parameters, and how you can actually compute those algorithms in order to produce this financial pricing and risk analytics that help you mitigate some of the tail risk and whatnot. So I've been specializing in this area right, for 17 years at several banks, Soc Gen, Société Générale, the French banks. I moved on to ING, the Dutch company, a couple of financial brokers in downtown Manhattan, and then landed at Citigroup, Citibank. I did headquarter in Tribeca, working on some of the biggest deals in the world in emerging markets, Latin America, SEMEA, Nigeria, APAC, Asia Pacific, all those phenomenal markets that you can actually, like, being creative and deploy so much capital, but you need to have the right risk management skills in order to make sure that you can mitigate those risks. So that was where I learned my ropes, and where I get, kind of the biggest foundation of where I'm coming from, which understanding trading operations, data management, but also risk and quantitative finance. So at the intersect of those three, I don't know if that's your next question. I can anticipating it. Web3, blockchain, and some machine learning came in the way the past 5-7 years.
Yeah.
And the last years of my time at Citi within this large US banks, I was involved into the innovation units, ventures innovation. So I was part of the venture studio within the big bank as an innovator, right? So I was working on integrating blockchain Web3 solution for some of the traditional products and derivatives, but bringing the best of technology. And I worked a few years in that field, essentially attempting to innovate from within a big incumbents, a big US banks, arguably maybe like the top third or fourth biggest bank in the world. I learned tremendously. I get exposed to one of the top minds in the world and very intelligent individuals. What I also learned is innovating from within a big US bank is, almost like mission impossible, because innovation comes from outside. It is very clear that if you want to create something very meaningful and disruptive, you got to do on your own, right? You got to do yourself. So that's what happened to me right around the pandemic, 2020, 2021, when the world was going through so much transformation, supply chain got dislocated, and all those models actually got disseminated, right? I came to the conclusion that now was the time for me to make the leap of faith and create my own startup.
Yeah.
And I'm not looking back. I'm so happy now.
That is really a good point. That makes sense why you take the logistic risk now because of that pandemic. That totally makes sense. I can understand. But anyway, coming back, just can you give us a quick overview as what company does for autonomy with your role of the CEO and the co-founder?
So so it's pronounced autonomy, like the autonomous technology. So autonomy is what we call a parametric insurance platform. So parametric insurance products are essentially insurance policies that can pay a preset amount, predetermined upfront upon a binary event trigger. So I'm going to give you like a quick example, which is not our product, but it's something that people understand well.
Yeah.
So the past, few years, even as long ago as 2 decades, there was some parametric insurance for climate, right? So let's say there's some tornado, some hurricane, some snowstorm that happen. Parametric insurance can be activated based on, let's say, a severity of a tornado, right? Severity 5, you get $500,000, and severity 6, you get $1 million, right? So that can protect farmers, that can protect, resort owners, or otherwise, right? So parametric climate product has been in existence for some time. Now, our product is a parametric logistics product. So we are in the supply chain, logistics, transportation space, and providing those digitized and binary event triggering mechanism so that the clients can get their money back quickly based on something that's non-disputable, right? So you don't want to go to the what we call the adjudication process, which is going after a claim, calling up your insurer, your adjuster, and trying to get the money back. It takes 3, 6, 9, 12 months. And at the end of the process, you might not get any money at all. Our product is 180 degrees. We detect the event and we pay you back within 24 hours, right, as a client. And what we're protecting against is something very meaningful as one of the biggest pain points in the space, which is cargo shipment delay. So we're protecting against a delay of shipments for commodities, merchandises, vaccine, perishables, semiconductors, livestock, organ transplants, all those customer critical and time sensitive cargo. They're protected for delay and interruptions thanks to our binary product, which is a parametric insurance. So we're very excited, while it's supported by blockchain and Web3 and smart contracts, and we're using the best of our algorithmic underwriting model behind the pricing and the risk management, what's more exciting for us is to bring a very meaningful product to logistics and shippers, right? So because now they can get the money back fast, as opposed to not getting the money at all, or taking almost years to wait for any potential repayment.
I'm going to come back to the insurance just a second. But that's one thing, if I would to summarize it. So let's say if I am an importer, I have these multiple container coming in, livestock, or maybe it's oil. So effectively, you are the person, or this is the type of the insurance that I would be buying, basically to say, hey, especially if they are time critical, as you pointed out, I need it to come in by this date, because if it is not coming in by this date, I would lose X number amount of money. So this is the time that I would be picking up this the cargo insurance, whether through the traditional broker, or I would take it through the autonomy. Would that be the right way to summarize it in a high level?
Yeah, I think you actually nailed it. There's a number of ways to look at it. The way you describe it is actually, very compelling, because there's a number of very important and exporter out of Asia and APAC, your region. The reverse scenario is a little more meaningful because we're based in the US, but in that case, there's a lot of fish and high quality fish coming from Japan into the US.
Yeah.
Extremely time sensitive.
Yeah.
They're vegetables. They're high value. Some of the total tunas, can go for thousands and thousands of dollars per cut.
Yes.
And then you delay by hours or half a day, and you lose the whole container. The container value is gone. So that's essentially like something disastrous that current shippers, exporters are not protected for. The cargo insurance doesn't cover for that at all. So we're coming in first to market in this breach. aka there's a big pain point. It is essentially excluded from those insurance policies. So that's very exciting. Yeah.
Dumb question: why are they not covering it?
So it is essentially like a very kind of so that's a head scratcher, right? For people from the outside. Now it's like it seems so obvious, and looking back and in 2020 hindsight, it's like, why are they not doing it? I think there's two main reasons for it. Number one is historical reason from the insurance legal framework. I can tell you for a fact, I don't want to digress too much, but I spent 3 months in London last year at the Lloyd's of London market, which is the heart of insurance. You've probably heard of it. And I was part of this innovation track within Lloyd's. Lloyd's exists since the mid 1600s, 360 years, right? a lot of their legal framework, the insurance terms, haven't changed for nearly 4 centuries, right? So you can think about shipping, which was the actual first use case that Lloyd's was covering, vessels and shipping from Asia to the UK. It was done over the course of months and months, and it was based on a pen and paper. So delay was not a thing because nobody can understand how they can underwrite delays or how they can mitigate. Those terms never change essentially. So you are facing with historical legacy terms that are extremely counterproductive. The second piece is now why now, right? Why now is the time, right? Why are we not waiting for another 10, 20 years, 50 years? Well, reality, a lot of the hardware and software technology have been accelerating parabolically, right? It's been an exponential progress in both software and hardware. So on the software side, API, clouds, and other technology to interconnect servers and platforms has been democratized tremendously. Hardware would be IoT sensors, monitoring devices, and other hardware embedded into containers, vessels, aircraft, trucking, and other telematics. Those are a new technology that's been accelerating quite a bit. 10 years ago, it was nothing. Now it's starting to be very much democratized. That's changing the game because now people have real-time tracking to satellite, GPS, to those devices. It creates the potential for now data-driven insurance model that didn't exist in the past. So we are in the intersect of those value theses. We want to leverage the best of technology, and we want to disrupt the legacy to make it something very meaningful for clients.
Yeah, I think telemetric insurance for the motor vehicle insurance, using the telemetric in the motor vehicle insurance was exactly the thing that came into my mind early on, as I come from the insurance company. So it sounds like what you are doing. So this is probably good for some of my listeners who are coming from the insurance industry, is that you're very much following that whole idea of pay as you go and pay as you use motor vehicle insurance, but where a telemetric devices is installed in the motor vehicle. What you do is you're taking this telemetric device and put it into this cargo or this container, and you are charging them, and you are calculating the risk as the data of the telemetric is telling you, and equally the delay, the shipping delay, etc. All the sort of information is coming from that telemetric devices. Would that be the right way of putting that?
Let me put a caveat, a little twist to what you're saying.
Yes,
Telematics, IoT sensors, hardware devices are part of our ecosystem in the sense that we want to expand to certain verticals. We want to use temperature-based monitoring. We want to use humidity-based. This is part of how we expand our product. The current set of our product, we're not using hardware per se, because we have access to certain API service that can actually track, some of the air shipments that we have in place, and therefore we don't need to deploy hardware ourselves in order to actually get our product to work. The product is already working with API services. In the future, and we are actually working on it right now as we speak, we have other use cases. As I said, temperature might be one of the things. Ocean freight, using some container telematics, or tracking. In US, there's a lot of tracking and ground transport that's using some of those devices. That's going to be an expansion for our product.
Going into deeper on that, so who are the partner installing those hardware into the container then?
Yeah, so there's several ways of doing it. I think my preference is the former, but I can describe, two two alternatives that I'm seeing in the market. The first alternative is when logistics firm and transportation carriers, so the CGM, the MSC, the Maersk of the world, but their logistics arm as well, or the DHL, the DB Schenker of the world, they actually take the initiative to create a fleet of hardware in order to create those data points and checkpoints so that they can track their own goods and assets, because they want to protect, their assets or their customers' assets, right? It's extremely important in terms of safety and also like delivery and also like all the steps in between. So customs, immigration, taxes, bill of lading, invoicing, everything that's, anything in between can be like a big risk that they're running. So those sensors are helping them manage their assets. So that's where I believe we have the most value, is we connecting with logistics and carriers to their fleet of hardware, and essentially getting the data in order to produce their insurance product they need, right? So that's the first alternative. The second alternative I've seen, which I don't believe is the right route, I may be wrong, but if anything, it's good to experiment. The second route would be for insurance company to equip some of the transportation and carriers with their own hardware. So in that case, you would think at maybe like an AIG of the world, right? I'm just picking up one of the biggest insurance firms, buying a set of hardware and then going on their own and go to each single container, vessels, aircraft, truck, and get those telematics in place so that they can monitor those risks and then create the insurance product for their clients. I believe that's like one level removed. I think the logistics are responsible for monitoring, and insurance are the receiving end of the data. That's actually a healthier setup and the way to actually run a business to my taste.
That makes sense now. So we talk quite a bit about the buy side and why the such market of the insurance exists and why it would benefit the merchant, the importer, the probably also the logistics supplier. I'm curious to know though, if we flip the coin to the other side, which is the insurer or the insurance company, given that is control and is data driven, and shipping delay timing could be quite critical, how do they ensure that it is a product that they want to sell, it is a product is not guaranteed money losing, that that opportunity in there for them to make decent money, but at the same time protecting the buyer who want to buy the insurance?
Yeah, that's the million or actually $1 billion question that you asked. So let me answer it in a short matter, and then I'll give you a little bit of a longer version of it.
Yes, please.
Yeah. Because we have access to the data ourselves, and we acting, as an insurance company, so to speak, because we're working with the insurance companies, we have control about the trends, the risk concentration, clustering, how we can diversify. And with that, our pricing model is designed so that we mitigate the risk, but we can also generate some profit, right? So the underwriting model is both, a client-based protection, rate calibration, that it is also like a profit generation product, right? Because obviously, if you put out in the markets an insurance product that's going to be tremendous value for the clients, but the insurance companies keep losing money or recording losses, then the next year they're not going to renew it, right? So it doesn't make sense for an insurance company to run that kind of programs. But you have to be reasonable enough in terms of pricing, so you remain competitive, affordable, and it protects your clients' capital, right? So because if you keep charging too much, then your client is just wasting money on insurance premium, which is not optimal either. So this fine line of finding the right common ground between remaining competitive but designing a product that's profitable, that's almost like more art than science, even though there's a lot of science in what we did. So I can tell you the longer story is it took me and my team, right? We have a full risk management, quantitative, and data science team running the whole data and the risk engine, right? It took us, nearly 2 years to get from the idea and like a quick pitch deck of 5-page with, something to show to an insurance company to the point that we actually signed a contract with the underwriters, putting capital in front of our program. So 2 years to make that happen, right? So that was on its own like some sort of go-to-market for us as a technology startup to make sure that they understand it's not just a fancy technology, but it was a fully vetted and thought through process of how we can look at the market as a whole, ingest all the data that's necessary for us to run our risk management, our pricing, underwriting, and then get out of a profitable product for them to actually back, right? So yeah, that was quite the process. Glad we went through it, and I'm glad it's over as well.
I can totally imagine. Now, understand that you put this whole thing and run it, and build it with the blockchain technology. Why blockchain?
Blockchain is a very powerful technology, right? I want to make sure that people understand that we're very proud to be part of this Web3 community, but we also not into anything crypto. We're not in NFTs. I respect this market, but I believe this market is going through a little bit of a tough time. Our product is a pure blockchain, implementation of transparency, record keeping, immutability of records, servicing, logistics, and insurance to actually bring the best of transparency across, right, the value chain. And that's one of the reasons like blockchain is so compelling to us. In the future, we'll be having some conversation around potentially decentralized underwriting, right? When you think about the pool of capital in DeFi and other digital assets that are bringing to the market in the hundreds of billions, trillions of dollars, insurance should be able to leverage from this untapped market for capital basis, right? We believe that because we are blockchain based in terms of our operations, but we also forward compatible to an open-ended market for decentralized underwriting. We cannot play in the best of both worlds, so to speak. But I want to put the caveat again that's right now our blockchain solution is enterprise and private, and we don't have any leakage into anything crypto.
Now, taking all of those telemetric data built into the blockchain to build the insurance, that totally makes sense to me now. My question then is, you taking the data out to do all your machine learning, all your AI, to do all the predictive analysis and share some of those information and all of those data back, whether to the merchant or to the insurer. How is that very much the same like in the typical SQL database type of the world, or is it a lot harder?
Yeah, so it's funny you should ask. We're going through a full refactoring of our data stack with our data engineers. We hired a very experienced data engineer, who's kind of revamping the whole ETL process, data management in the back end. He has some experience in aviation as well, so he's helping us through this air cargo product that we're building. So right now we actually going through from kind of a legacy, setup into something much more scalable. So I'm not going to bore you with the details, but the first order of business when I talking to the senior data engineer, Dan, I ask him, you have to think, as we're going to be servicing the whole global transportation business, the whole logistics supply chain business, and it's not only air freight, it can be maritime, it can be ground transport, rail, it can be a number of risk parameters that we're monitoring, not only delay, but also temperature, humidity, fire, smoke. So our data model is the core of our platform, because the better the data, the more the data, the better we can be pricing and risk managing the product. And it's going to be also like a stream of clients that are going to be more and more interesting in getting those real-time updates and how they can risk manage their portfolio better. So data is at core of the platform. We releasing V2 and refactoring of our data stack the next few months. Very excited about it. There's going to be some SQL still, but I think it's going to be a little more advanced than that.
Absolutely. Sounds like the risk management, all those sort of thing is still critical on this one. Now, for those people who have been using the traditional cargo insurance, give you want to tell them why they should consider using these new technology offered by the autonomy and time-driven logistic cargo insurance would make sense.
Yeah, no, so absolutely. So we're working with the best-in-class underwriters and insurance brokers. So our insurance brokers are our distribution partner. They open the doors with end clients in logistics, transportation, shippers, exporters. So it's very clear right now there's a very jarring need for any of those supply chain players to get the right protection for delay and interruption, right? I think we're assessing, more than $10 billion loss, and that's probably like underestimating because of delay and interruption. So we believe that there's a glaring need, there's a growing pain in the market, and ironically, the delay insurance is still excluded from traditional policies. So when you hear about such a dislocation between, supply and demand in the market, you got to jump in, right? So we want to help them to understand their, capital losses when it comes to a delay, their diminishing value of containers and assets when they're suffering an interruption, any liabilities and any penalties they suffer when the delivery is late. We want to tailor make a product that can be used, immediately and in only few clicks of a button, because, we all fully digitize in terms of customer path, from quoting to binding and to issuing policy, everything is digitized. So not only it's simple to get a claim settlement, but even the entry point is extremely simple for them to get a policy set up. So all that is kind of screaming for, fast distribution, more logistics getting the money back, and more transparency in the market, which is something that's not happening right now.
I'll make sure to list the company website, Autonomy, which is OTONOMI .ai in there. And what other than that, what is the best way to reach out to you?
So you said it, autonomy.ai website. We are Autonomy in LinkedIn, Autonomy company. We got an Autonomy platform Twitter account. You can also find me on LinkedIn. So Yann Barbarroux, YANN, Barbarroux, BARBARROUX. I'm on LinkedIn 15 hours a day. You can find me there. And that's how I met Jason, by the way.
Indeed. I will make sure to list the URL of the LinkedIn profile of Yann on there. Here are my two final questions to wrap. My first one for you is, what is your most important first principle
Uh, Personal or corporate?
Either one is fine.
Yeah, first principle. I've been coming to a lot of thought about being able to actually listen to people and showing some compassion. I know it might sound a little cheesy, but it can be a project, it can be a situation, it could be a relationship. You can struggle in so many ways in life, but all we have is conversation or communicate with others. And more often than not, everybody's coming with this own set of problems. If you come from a belligerent or a little aggressive stance, people are going to be defensive. If you start being more open and trying to understand where they're coming from, you can resolve most of the problems. And yeah, understanding someone else's point of view of where they're coming from is what compassion is for the most part. So that would be like maybe a word of wisdom I want to leave here.
I always thought that I have good listening skill, and if you listen to some of my podcasts, you probably notice that I listen more instead of talking more. But I actually think that there's still so much room to improve. I actually think that active listening is very, very, very difficult to practice. Listening to understand instead of listening to reply is very, very difficult. So I really applaud you for that. I have to say it's something that I'm still working on for myself. Active listening. My final question for you is: what is one book that you have read and thought it would have been better for your younger self to have?
Um, so I've been reading some of the books from Sam Harris, one of the intellectuals in the US. He's based in LA. He's been very vocal about data science, AI, religion, politics, everything in between. Listening to his podcast, but the end of faith, his book about 20 years ago, was transformative, right? So how you think about free speech and how you want to, trying to set up an open conversation, intellectual matter, but also simple topics that needs to be happening between people, and keep being like, on the fence and trying to like point fingers at the other side is just aggravating situations. And again, I'm coming back to the first point, is like, opening up conversation and listening in pretty compassionate intellectual manner is where, Sam Harris has been teaching me a lot about whatever's going on right now, which is not all that terrible, but it's pretty problematic and globally. So I would recommend it.
Well, thank you so much. It has been a wonderful episode, Yann. I learned so much more about the cargo insurance and also introducing the telemetrics into this whole cargo insurance market to make it more time and data driven. And obviously, how we can then extract the data out there to do all the predictive analytic and provide the services back to the insurer and also the buyer. Has been a great, great episode. Thank you so much for sharing all of those things, Yann.
Thanks a lot, Jason. I appreciate it. You woke up early. Very glad we connected. And yeah, let me know about next steps. I would love to help you if I can as well.
Thank you, Yann. Hey guys, I got something really exciting from my friend at the Australian Computer Society to share with you. Now, ACS, they are going to run a Queensland State Tech Summit for the 2023. And I think this is a really, really good opportunity to network with some of the brightest minds in the industry, but also more importantly, I think here's some of the ground success story and the example from the Queensland Tech professional. Now, the event is going to take place on the 26th May of 2023 at Cloudland 40. Now, this is a lovely place for those of you who have been there. Now, the previous event is really a perfect opportunity for those technology enthusiasts to come together to learn from some of the industry experts. I know some of my friends actually is going to be there and speak and share their idea and experience. So I highly, highly recommend that to join this event. Now, with a diverse range of speakers, including some of the top leaders in the tech industry, so you really can expect to gain insight on topics like the cybersecurity, local approach to the inclusive tech leadership, low-code gaming technology, obviously data, analytic AI, and also really interesting is the space technology. And for those who are not familiar, in Queensland, we actually have quite a few of prominent space startup in Queensland. So and obviously with more to come. So, but that's not all. I think that is also excited to announce that we'll also have some photo booth where you can really get your headshot for your LinkedIn profile taken for you on the day. Now, this is really, really important or useful, especially if you are active on LinkedIn, and to showcase the best of you on LinkedIn for your potential employer or customer if you are doing a lot of business development work. Now, finally, that is also opportunity to explore some of the skills for the table and also network with your fellow attendee. Now, register today for early bird tickets, and if you are not an ACS member, use the promotional code of the Analytics Show listener is ACSTAS. I repeat again, ACSTAS at the registration page to save $125 off the event ticket and join us at the ACS Queensland State Summit 2022. So I look forward to seeing that. If you have any question, I'll just give you a shout out or give ACS a shout out. I will share the discount code on the LinkedIn post also in the email as well. See you there. Bye. If you enjoyed this conversation, hit that subscribe button so we can meet again. If you don't, I'll be stuck in an infinite loop. So pull that part by clicking the subscribe and help me out. You can further support us by leaving us a kind review from wherever you are listening. At the end of the year, I will choose a reviewer to send a special gift to, and it might just be you. Look forward to seeing you here next week for a new adventure. If I can find my way out of this endless loop. See ya.